Hey guys, Humphrey here. So a common scenario for newer investors is, hey, I only have $1,000. What should I invest in? So today I'm gonna go through exactly what I would do if I only had $1,000 to invest at this current moment. So even if you only have like 50 bucks or 500 bucks or anything less than $1,000, this video is for you. It's also updated for the current environment that we're in, which means I'm gonna be including some good investments that you can make against inflation and any upcoming rate hikes that we actually might see from the Fed this year. There's gonna be a couple parts to this video. The first part will be about if I wanted to take $1,000 and invest it in myself. And then the other part of this video will be about if I had $1,000 to invest and I wanted to start a stock market investment portfolio. I'll leave timestamps below in the description in case you just want to skip around. Okay, so in this first scenario, you want to invest in yourself. In my opinion, this is one of the best ways to increase your initial $1,000 and grow it into a larger sum. The reason why you'd rather do this than invest in the market comes down to basically, well, math. Let me show you what I mean. Investing in a diversified portfolio in the market can be a great thing, but let's say you get an average return in the market of around 8%, which is, by the way, the historical return average of the S&P 500 over a period of 40 years. After 1 year of investing $1,000, you'll make $80 on your initial investment of $1,000 or 8%. $80 is great and all, but to really take advantage of investing, you really want to be investing with larger sums of money because of how well capital scales. If you get an 8% return on a $100,000 investment, that's actually pretty significant. That's $8,000. And at $1 million invested, 8% is 80K. The market performs the exact same in all these scenarios, but the difference is that if you have more money invested, you can just make way more money on an absolute basis. So then our goal should be, let's get to a sizable sum of cash invested so that the money can start working for us. I think this is the quickest way to get out of trading your time for money. So how should we invest in ourselves? We can do so in multiple ways, but the two most important things are interest and knowledge. You need to spend time doing things that you're interested in. Now, this is a pretty simple concept, but if you aren't investing in things that you're interested in, you're gonna naturally lose interest. That's a pun. And you'll probably lose money. If we can stay interested in our subject matter, we'll have a more likely chance to succeed. The second thing you should invest in is knowledge. Knowledge is extremely powerful.
Knowledge is power.
And the reason is that if you have an intimate knowledge of a subject, you can trade that knowledge in the market for capital. One of my favorite investors and thinkers is named Naval Ravikant. He's the founder of AngelList and multiple other ventures. And he said that in a podcast that if he were dropped in America and had to start all over again from scratch with no money, that he could regain his fortune rather quickly because of all the specific knowledge that he's built up over the years. And the reason is because knowledge of how industries and businesses work are incredibly valued in our society. So let's pretend we're in the Middle Ages and you're a blacksmith making swords for your village, but there are 3 other blacksmiths in your village as well. Competition is rough and you're barely making any money, but you hear about a new village nearby that just started up and doesn't have a blacksmith. You leave your existing village and immediately within your new village, you are like a Hollywood celebrity. Everyone wants a sword made by you. You can pretty much charge any price that you want because you're the only supplier of these swords. Well, there you go. Because of your knowledge of sword making, you're able to trade that knowledge for an incredible fortune. The world and society works similarly. If you're the only one that knows how to do a specific task or job, you're going to be rewarded for it. So personally, if I had $1,000 and my interest was photography, what I could do is I could spend $500 of that $1,000 and buy a DSLR camera. I could then enroll in a couple courses with the remainder of the $500, and I would probably start taking thousands of pictures in my free time. I guarantee you that if you were to do this, you would naturally get better at taking photos, and soon you would be able to trade your skill, which is photography, for more income. This is just an example, but this is why having a skill and building knowledge is such a good investment in yourself. And to my point earlier, you want to be interested in whatever you're pursuing. It's just going to give you a higher chance of success overall because you're going to stick with it. If you don't want to pick up a new skill and you're already in an occupation, another option that you can pursue is a certification or credential that can instantly boost your salary. Monster.com launched a report that outlined the top 10 certifications in all industries. And for example, if you worked in the logistics and transportation industry, you could become a certified automotive fleet manager. The median pay of someone not holding that certification is $55,000 a year versus if you actually held that certification, you would pull in over $70,000 a year. So that's another option to look around in your your industry and see what credentials or certifications are out there to help boost your salary. I'll also leave some relevant links in the description below for your reference. All right, so now let's talk about if you want to invest in the stock market.
I always wanted to be rich.
For this, you can take your $1,000 and invest in a diversified portfolio, and this is exactly how I would break it up. I would put 500 of it into ETFs like VTI or VOO. These are ticker symbols that you can enter into any brokerage app and buy these funds. An ETF is a type of pooled investment where by buying into one fund, it spreads out your money into multiple different holdings, sometimes in the hundreds or thousands of holdings, so you get instant diversification with one purchase. So VTI is the total US stock market and VOO just contains the S&P 500 stocks, but they both perform quite similarly. The reason you want to invest a large chunk of your money into ETFs is that they're passively managed, so after you buy it, you don't really have to do anything with it. It's also good for the investor that wants to buy and hold for a long period of time. And in fact, even Warren Buffett thinks index funds and ETFs are the best way for everyday investors to grow their money. His regular recommendation has been a low-cost S&P 500 fund for most people, and he believes in this strategy so much that in 2007, he famously made a $1 million bet with a hedge fund manager. The wager was that his passively managed fund strategy would beat out any active hedge fund trader. And guess what, guys? He won. Buffett's S&P 500 index fund returned 7.1% compounded annually over a period of 10 years. The competing basket of funds selected by hedge fund protege partners returned an average of 2.2%. So basically, Warren Buffett did nothing this whole time and still beat out active traders. He then donated the proceeds to charity, so good on him. So $500 or 50% should definitely go into ETFs for the long term. I would call that the foundation of our investment portfolio. The next $200, I would probably put that into a growth ETF like QQQ for the technology sector. QQQ tracks the NASDAQ 100 index, which includes a lot of the top growth tech stocks like Google, Apple, Microsoft, and more. This will probably be a riskier portion of your $1,000 investment, but having this 20% allocation into growth should give you the exposure you want to some of the best returning stocks of the past 10 years, including Amazon and Tesla as well. If you aren't investing into growth, another option you can pursue are international stocks, so you could swap out your $200 of growth for international stocks. Many firms had an outlook for 2022, and they recommended to be underweight in US stocks, and they're putting more emphasis on emerging and European markets simply due to the historical overvaluation of American stocks. That, and there's some general uncertainty among analysts and firms about the current interest rate and inflation environment that we're currently in. Now, when there is that uncertainty, a lot of people just solve that through diversification. The easiest way to invest in international markets are through ETFs, such as VXUS or VEU. Both of them are Vanguard ETFs that give you exposure to international markets besides the US stock market. So that leaves us with still another $300 left to allocate. I would put $200 of the remaining $300 into a high yield dividend ETF like SCHD, which is Schwab's US dividend equity ETF, or VYM, which is Vanguard's high dividend yield ETF. Since we're experiencing a lot of high inflation this year, most experts point towards value stocks and companies that have strong cash flows, which will typically outperform during times of inflation. By owning a dividend ETF, every quarter you should receive income payments in the form of dividends, as well as the underlying companies that the ETF usually holds are larger, more stable, positive cash flowing companies. Not only is this investment good for the long term, it's especially good this year in an uncertain environment. The last $100 is going to be my play money. With this, you can do whatever you want, whether that be invest in your favorite cryptocurrency or individual stock. Now, personally, I buy my crypto on Coinbase and my stocks through multiple different brokerages, and I do have links down below in the description where you can get free stocks or free Bitcoin just for signing up using my link. Make sure to check those out, but full transparency, I do get a commission if you use them, so if you do, I really appreciate it. Another option I wanted to touch on is that if you are purchasing stocks and you're investing for your retirement, you may want to consider buying them in a Roth IRA, and that's an individual retirement account that you can start on your own. By investing in stocks within that account, any gains that you get on your stocks are going to be tax-free. The only catch is that you're going to need to be of retirement age to withdraw it, but still, there's no better account if you're investing for the long term. I'd recommend checking out some of my videos on Roth IRAs, which I will link down below as well for further education. I really want to say that investing really starts with saving. So if you're budgeting properly, paying yourself first, and saving money, you can really come from a position of power and leverage when it comes to compounding your wealth. If you're constantly in debt and not disciplined, it's going to be a lot harder for you to build up your initial $1,000 into a larger sum. So that's exactly how I would invest $1,000 in 2022. If you guys do want to check out that video on Roth IRAs, I'm going to leave it right up here. Also, if you want premium content, live coaching, in a community to bounce ideas off of, you may want to check out my Patreon, which will also be linked below. I think you would really enjoy it. We have a lot of members that do. All right, have a great day. Peace.